Yeah, good afternoon. Just quickly, let's go to SNR plus trend lines, Confluence, how you can make use of the best way to trade trend line breakouts. So using your SNR levels, yeah, this is fantastic, so fantastic. I wish I have known this for years past. It will blow your mind. So we have here, before we go, let me show you the different type of I'm going to show you different type of trend line according to that has been discovered by these people called the Malaysian traders. The trend lines types, though I have other ones that I've done the research and brought down, but they have been consistent in the market. Like I told you about this something like this, slant trend lines, where you have something like a head and shoulders slant trend line. See much about that, yeah. Then if it happens to be the set size to be like this, to be like something like this, then you have the slant. Yeah, something like this. Yeah. So but that's just my own research right now. I'm still working on that. The perfect it very well. Then this has been the establishment from the Malaysian traders. So this is the regular types. Type 1 is type 2 is the breakouts. Then the trendline divergence. We have the trendline divergence where the trendline moves upward. Move upward like this. Then while price is trying to move downward. I mean, that's what diverge from it. So that means something like this will happen, to take place, something like this. Yeah. So do your own. I've posted some videos on the archive. Go there to watch those videos. I'm just there to give a glimpse of what I found out in this from this including my own mentor who is right now I'm still on the mentor table from them. I paid so much for this $1,500. It's not a small money in our country now. $1,500. It's much, but it's really worth it. It's really worth it. It's a big revelation. I'm just trying to let you get a glimpse of faith. You see this happening up and down in the market. It is highly, they are highly consistent and regular, highly probable, predictable. You can predict, and the market, if price got to that level, sure that it will react. It will react. So this is the regular, where you have price moving to the first low, second low, then the third low, it bounces. Then if it's coming down, the going to say that means the first high, then another lower high breaks through the previous low, then makes the third hit. This is lower than the previous high. Then you're going to see a big drop. Then we have the breakout, which is this. If price was previously moving up in a lower, in a higher low, higher high format, then there was a kind of breakthrough here. Then a retest to that breakthrough level, which is the previous support, will make the price drop down. There are some certain rules I learned from my mentor that you must guide yourself in between these trend lines. Yeah, because there's something we call the miss. Yeah, you must have a gap between this space and this space. There must be a space. Miss, because there is miss. If you can just DM me. I will engage you with my this. So let's talk. Then this is if price is coming down here, blah blah blah, then it breaks out of this lower high, then it makes a retest to hit the trend line, then it bounces off it, we give you a good buy. Then this is the most regular. It's regular. You maybe see it. I call it sometimes. I'll be calling this three drives to the top, then three drives to the bottom. So whenever you see it, and mostly when you see a a higher time frame, if this happens at a higher time frame POI, point of interest, that's why I told you that it is a good combination with a SMC or liquidity concept. If this happens at a higher time frame point of interest, and while the second and the third points are above are placed above the point of interest. The point of interest, that zone, the key level, that means there's a high probability that the price will drop, because this is what we call the trendline divergence, right? Price was moving in a three-step upward, right? Three drives upward. Why? That means marked by your trend line. So whenever you have an SNR that points this way, you have an SNR along this line. So that shows a divergence between trend line and resistance, So that gives you a good sell. So the last distance will be sell. So when you got to get a kind of price rejection like this, that will take out that high, or take out that high, or a kind of something like this. Yeah, let's see something like this. Oh, sorry. You may get to something like this, under the gap, try to form a kind of a decision point there. Then another price moves higher. Another price moves higher to take it out. So a withdrawal back inside this thing will give you a good sell. So we want to see this happening on the so when you see this, right? So a withdrawal back inside with a close below it will give you a good sell. A good sell. Yeah, a good sell. So if this happens here, that is a confirmation that the price is going to drop down. It's going to drop down. So then you can go to a lower time frame to see your entry pattern like this, a chalk, then this, right? So when you see this pattern here in your lower time frame, it's a good sell. So price will start dropping downward. It's a good sell right from this place. You see that. So the opposite is for the buying market. Yeah. So that means around this place there will be a higher time frame key level. It could be gap. It could be a kind of a this. It could be gap. It could be a breakout. It could be the classical regular this. It could be a head and shoulder pattern in the past. So as long as this place gives you a particular high time frame level of support, so and you have the second point and third point that falls below this place, that gives you a good divergence, right? A good divergence, right? So when price break through it, you close above it, go to your high in a lower time frame, give you a good buy. So let's go to I'm going to just show you. I just got this from. I just posted this right now on my on the trading group, on my Telegram trading group. I just pasted this in Telegram trading group. If you still need my this, if you're able to join if you can contact me or I at the Guru Yeah, this is my Telegram username. Contact me how to join the group. This is my contacts. Just DM me hi. 4 083 212 118. Yeah, that's my price action traders group. So your contact, just contact me. So if you want to join the group for more hints on this site, on this. So now let's take out this. Let's take out this. We'll take out this. Right. So price has been, going up in a higher, has been moving up, higher high, higher low, higher high, higher low, steadily. It has been moving up, higher high, higher low. Then you can see this. This is the this down. What you need to do, just be tracking your this with your with a trend line. With a trend line. With a trend line. With a trend line. To see this is very well, go to your line charts. Line chart, this is line chart. We mark up the V shape, the V side. Yeah. So you can see right now. So, and the price has broken through the this, right? Price has broken through the stop. So that give you this place here. This type of trend line, I'll just show you. See this type. This type here. See it? This type, right? Right. So we are waiting for price to pull back into this. This is an SNR level. Here, you can see that. You can see it here. Listen with this. This is an SNR. Can you see? This is SNR, the classical. It has become fresh here because it has been broken below. It becomes a breakout SNR. That's a breakout. Then it convergence with the confluence with a trend line. This point here. So we are looking for price to move back, take out this particular this thing here. Just double this in there. Double what? Double stop. So your stop loss be around here, and you are targeting this level or this level. First take profit will be here, then try downward. But this is a weekly. You can imagine this is a weekly chart. This is a weekly chart. This is a weekly chart. So your this thing will be around the 6. So whenever 6.67 risk reward ratio, whenever the this thing moves downward, you close the this into the break even. Then you send it. Yeah. So now take it to this place. So let's see how you go to your lower time frame, like 1 time frame lower or 2 time frame lower, like 4 hours or thereabouts. So then yeah, you can see this is what this is gap, right? This gap at the level of DC. Can you see the breakout? Retest, we break out, we retest, it bounce from here, then a breakout here. Then this will give you a good this point. So we're looking for price. So whenever price retrace that place, hit our this inside. Shit. So your order is hit. Can you see that this is engulfing at the trend line breakout? Say engulfing. Say engulfing. That's another confirmation type of candlestick I'll tell you. So you must look out for at the level of your trend line touch. You will see it. We see an engulfing. So we rightly put our DC here. To minimize our. So put that then it enters here right now. Then you start seeing this is downward. I see. So this is the second one where we have a this is the second one. This is the second one. I see market out here. The second one. Then we have our this SNR with it. I see the Confluence. It comes below the trend line. Where this one too comes below the trend line. Can you see that? That's one of the this thing we learned from the Malaysian traders. So if the SNR must fall below the trend line. It is not compulsory. It is not compulsory. So it's not compulsory. But if it falls like that, it's good. But it's not compulsory. Sometimes it could be above it. Sometimes it could be at the same level. Especially when they interact at the same, when they intersect at the same point, right? So we have this in here. Then we have a breakout. See this is what this is engulfing. This is engulfing candle. This is engulfing. A withdraw back. Then we have another this in here that make it more potential. Can you see that? So it is not compulsory that. So we have it here. We have a this is there that gives you a good probabilities zone. Probability zone. Then price starts moving downward. In continuation of your sell. Start moving downward. Continuation of your sell. See it? See, this is gap, 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 gap. See it? Fast withdraw back. So you continue to draw your this thing closer, draw your close your this thing. Take profit one is golfing here. Then furthermore you have your this thing here. Yeah, I'm going to see if there's another this in there, another line there. Let me I'll put up this, put up this. I'm going to see this is first point, second point, third point. Any hit below here, because this is going to be another breakout. Like this. We're going to see something like this. We're going to look out for something like this. Yeah, I'm going to look out for something like this. Yeah, so let's play forward for a new sell here. You see that? Because we are getting this in here. This is this is here, SNR. SNR that has been taken, but it will be retested. It's retested. And you see, it hits the trend line. Hits the trend line. Can you see that? Engulfing. It's a drop. The exact same play with the trend line. You hit the trend line, it will not close above it. As long as the price does not close above it, price does not close above it. Engulfing, engulfing, engulfing. This weekly chart, this weekly time frame, right? So you can still do your DC there. So you can see the breakout. There was a gap in between this place and this place, gap between here, a gap between here. Call it miss in Malaysian, call that a miss. So there's a BMS here. See the BMS. A liquidity inducement was taken out here. Then price moved into this place. They kind of maybe like your normal fair value gap. If you want to combine that, normal fair value gap, can you see that? At the same, they intersect at the same point, of this thing, at the same point. Our price continue moving downward. Price continues moving downward. We have any new this in there? Have any new let me check from my line chart. There's a new. Wow, great. I see that. So we have another good opportunity to sell. Trend. Can you see it? See it? This is what? This is a engulfing candle. Engulfing candle. Musaya. Looking at this place. Adjust this trend line. Because you must be logical in drawing your trend line. Yeah, you must be logical. Not this. You must be logical. Don't just draw your trend line anyhow. Then the angle matters. Must not be like flat like this. Still looking at this one play out. So this is my slanted this in here. Can you see this? It breaks through. So your entry will be the break out of this place here. Break out of this place will be your entry. Break out of this place. When you anytime you see that slant, see the slant here. See the slant. Break out to be here. This is take up liquidity in this net. And this will give you yourself. The slant. I'm still working on that. This is a slant. This is slant. This is slant. So your buy will be here at the breakout of this place. Breakout of this place or the breakout of this place. SNR. The buy will be there. The head and shoulder pattern. This head and shoulder pattern. See that? Head and shoulder pattern there. Yeah, this is the peak, left shoulder, right shoulder, QML. A price moves down. So you can use this opportunity for early entry. You know, your stop loss is going to be here. You can imagine the stop loss from here to this place, very small, very tiny. So as you have this, see the engulfing breakthrough it. You have this withdrawal from this level. From this level of this SNR, you have withdrawal. You continue to stop your order. See it, a rejection below it. Stop loss above it, then sells downward, sells downward. So I want to see this. Yeah. So now you see this one here. This one comes from a conjunction of two trend lines here. This is 1, 2, 1, 2, 1, 2, 3, right? Then where's the stuff here? This is the stuff here. Can you see this one? It intersects with this exact at the right place here. Then we have our this thing here. We have our this thing here. You see this? This is a breakout. Can you see that? This is a breakout SNR. Price break through it. This resistance was taken out by this body. Price break through it, touches this back. At the same time of the trend line, where the trend line these two trend line intersect, that's X type of a trend line, X. So then you have your buy signal there. Buy signal. Price does not, the stop loss be here. Your listeners, you have been closed because this place right now shows you that there's a change in price. So you must have taken out your order here to buy into this. Can you see this? See this? Chalk. This chalk, changing market structure. Then I can imagine if you were waiting for this place here, price does not immediately come down to touch here. Because of what? Because of the confluence here. Price does not immediately touch there. Can you see that? Price continues to move higher. Does not come down here. So that's why you need to guide yourself with this knowledge. I see that right from this place. Right from this place. Right from this place. So we are targeting here. Targeting this place, another point. Another point. This place or this place. Let me remove this so that it will not be too some agreement. That this place. So you can see there. Once you see an engulfing, I'm waiting for my pendulum currency to fall there. I see that price move higher into this SNR. This SNR. It should be this. Into that SNR. Yeah. This is engulfing 1, engulfing 2, 1, the second point, 2, then 3. It intersects with this what? With this SNR. With this a breakout, SNR breakout here. It intersects. So we're waiting for engulfing. Once I get my engulfing here at this intersection, you enter another new cell. New cell. Retest of it. This will be here. Yeah. So right now, and it's still coming down, still coming down. Yeah. So this is the present week right now. You've gotten something there. Hmm? You've gotten your ×2 or thereabouts. This is your entry point. Hmm? At this place you trace it, this is your entry point. You've gotten your this in there, you close the this your break level, you will extend this place forward to this place. So probably by next or thereabouts. So that is how we how to trade in conjunction with SNR and trendline breakout. The best way to trade trendline breakout, use your SNR level as what as a checklist where they intersect with your where your trend line intersect with the where your trend line intersects with the DC. So you make your DC. It could be this form. The intersection could be like this, could be like a kind of a kind of divergence. 3 drives up. So you must check backward. This place must be what must be. The second point must be above a high time frame a POI or resistance key. High time frame key level. Yeah, on the high time frame key level. So that's when you come here, you see a kind of SNR, that trying to diverge from it. Shows that the price will come down. Especially if there's a kind of a price rejection at steep here, quickly observe that opportunity and you sell downward. So this will be here, the first target will be here, and then so the opposite is for the buy. So God bless you. Don't forget, if you want to my this is here, just contact me. Please beware of scammer. A lot of people have been trying to clone my this. Beware. So the best way, that's the best way so far, and trade your trend line. Best way you can trade your trend line. The best way you can trade your trend line. Best way to trade your trend line. I've shown it to you. Yeah. Showing it to you. This is another style. Regular trend line. Can you see it? Can you see it? So that's chalks there. Chalks. Right? Come back to it then. You see. Right? So it gives you a good distance. So this place becomes your convergence here with a kind of a SNR level. A connection between the SNR level and this pullback here will give you a good above the trend line. So you can see that the breakouts, and price moves higher. And see this is a SNR classical level. Have another one here. Price to test it. Break through it, come down. Engulfing. This is engulfing. Bullish engulfing. This candle. This engulfs it. It gives you a good markup. A good markup. Then we have my own this thing here that I've told you I've been doing this thing here. Can you see this? Can you see it? It kind of, what is this? What is this? What is this? Is this wedge or thereabouts? Or this triangle? Can you see this? Good point. Good point. Turn to your line to see it clearly. See it? Good point. This is a peak down, a valley. There, left, right. As long as this one does not come below this place, it gives you a good estimate. Like what opposite of what happened here? See this? Opposite of what happens here. See it? It's not. Then you have your DC here, your breakouts. Your breakouts below that SNR will give you a good entry point. This is weekly chart. Weekly chart. The same thing happens also. So it's a slant this thing here. Can you see it? Then your this thing will be, oh God, this is sweet, so sweet. Your this will be here. So you go to your higher time. Once you get this in your higher time frame, weekly or daily, be assured that this thing is what I'm trying to see something here. This thing is superb. Yeah. So it can be, as long as it connects, I think minimum of 2. So that's the rules of trend line. Minimum of 2. Like what's happened here to the breakout. So that's that for. God bless you.